Hello and welcome. You're watching India Market Open, and it's finally Friday. All eyes will be on Jackson Hole, and back home, of course, the bulls very much in control of the street. Good morning, Tamanna.
Good morning, Samina. Bulls in control, but snoozing right now is how I would put it. They're definitely a bullish stance, but nothing much happening in the market as per movement. We closed on the positive yesterday, but still, it's I think the big trigger perhaps going to come from Jackson Hole. Just, Samina, one more story that caught my eye before we get into the business of the day is that the first mpox case was found in Asia, in Thailand. And, already in Mumbai at least, because that's where our studios are, the BMC has come and said they've already created a 14-bed facility in case there is any case. Because, we're learning from our COVID mistakes, right? And you have a lot of international travelers coming into Mumbai. Vaccine makers are already talking about how they're ready. So we hope this doesn't become like that.
Saving grace, Tamanna, for us is, of course, the first case is in Thailand, but summer holidays are behind us, which may be a good thing because at least outbound travel at this stage could be restricted. So infections coming in because of locals may not be too bad. But the other worry is that across Maharashtra, at least, and especially cities like Pune, you've got dengue, you've got chikungunya, you've got swine flu, and now mpox being added is going to take a toll, I'd imagine, on the system.
Let's hope it just stays in as a contained kind of situation, and the world's learned from COVID, etc. All right, back to the business of the day, and a quick look at what the global cues are telling us. It's all about Friday and Jackson Hole. Let's just put it that way. So let's look at what happened in U.S. markets. That rally had to take a breather. So you had a bit of pullback in the global rally and the US market rally, which we were seeing. Nasdaq hit the most, so IT stocks hit the most out of that set. And that retreat is coming ahead of that Jackson Hole meet, and all eyes, of course, on what the Fed chief will say. Jobs data came out yesterday, weekly jobs data in line. So jobless claims rose to 232,000 in the August 17 week. This is meeting estimates, so no big worries over there. Remember, the revision of the job list, the job numbers, new job numbers from last financial year was a bit of concern, but okay overall. Bond yields have shown the nervousness coming in ahead of Fed speak and listening to what Powell says. So the 10-year at 3.83, so you saw bond yields rise. And that's a bit of a worry in terms of what he really says. Let's talk a bit about crude. Crude is on a downtick completely. US-China demand concerns are there. Brent is at $77 levels. And there was an interesting report I was reading talking about how, despite one part of it, of course, is the Chinese economic outlook. And if that is slow, then one of the largest guzzlers in the world means you have less demand, but you also have more and more people moving to either electric vehicles or moving from your traditional petroleum to LNG, etc. So there is a concern that China's demand may be slower for a longer term, and that's an interesting trend to see. Quickly look at how Asia is. Asia was mixed when I saw last, but we'll pull up how Asia is looking. On the lower side ahead of that symposium speech. But let me just pull up what we're expecting from Jackson Hole before we get to Peter McGuire and get his take as well, and why this is such a big deal. So Jerome Powell, the Fed chair, will be speaking at the Jackson Hole Symposium in Wyoming. It's the Federal Reserve's annual sort of meetup. And in the past, Powell has used this speech to outline his policy outlook. That's what the street is going to look for. Is he going to reiterate and underline the view that we are going to be seeing a September rate cut? Is there going to be some hint of quantum of rate cut, and how consistently you're going to see rate cuts continue? So all of those are things that we're going to be looking at. But let's get Peter McGuire in. He's a CEO of XM Australia on Jackson Hole and more. Peter, great to have you on, as always, on NDTV Profit. And, let's start with exactly that. Markets, I think, world over in a sort of wait-and-watch mood. Is too much being placed on what Mr. Powell will say at the symposium?
Well, good morning, Tamanna. I don't know if too much. I mean, we've been working towards this for many, many months, and everyone's had their, I suppose, in their calendar, we're getting to that point as far as Jackson Hole. No, I don't think so, because there's a split jury. It's either going to be 25 or 50, and the probability of about 35 or 40% probability of 50 basis points. So this is all impacting, and what we've seen this week as far as sell-off, as far as dollar, has been quite dramatic. It's bounced a little bit to the upside in the last matter of hours, but, you know, it was nearly through 101 there. So I feel as though we're going to wait for every word that Fed Chair Powell says later today, and I think we'll be analysing every sentence.
We will be analysing every sentence. What's the bet, Peter? We should bet today that we will have at least one sentence which says it depends on the data that we see over the next few weeks, because that has been the consistent stance of the Fed, right? We're not going to stick our neck out and promise anything. It depends on how the data moves. So looking at that and considering the fact that a September rate cut has pretty much been priced in, what really is the upside that could come out of this speech?
Well, there's got to be something as far as the labour market. Maybe that's going to be or from an economic standpoint, Tamanna, that's the only things that are really going to, I think, ring the bell. That wasn't a good number that came out in the last 24 hours as far as that revision down about 818,000 jobs. Take it any way you want. It's as bad as well, it's the worst you've seen since 2009. So he's got to put a little bit of sugar on the sandwich today and make it more palatable. And that's where I think traders are mindful that there could be a 50 basis point cut. So, you know, this is all the factors that have got to be weighed in on this. And we've just got to work through it over the next matter of weeks and see how it drops.
Peter, good morning. It's Samina joining in as well. 2024 has been a year for gold. It's eased off just a little bit, of course, on back of the dollar strengthening in overnight trade. There are some people who believe $2,700 on gold as early as the rate cut in September. What is your strategy? What do you advise? Current levels still look good for a buy on gold?
Well, Samina, great to see you, and I think so. You know, when you're putting a couple of things, first off, if you're looking in the gold-silver ratio, it's about 85-1. It was that yesterday, so it's probably close to it now. So that's something that traders need to be mindful of. The second part of it is, it was 25.50. It's back at about 25.25. It's not a big step up really to 2,700 as that US dollar comes under pressure to the downside. This is all going to factor in. If they cut it by 50 basis points, I think you've got every chance you could see a 2,700 handle. You know, I'm not sure where we are by year end, but there's still, you know, best part of 4 and a bit months to go. And I think 27 will be taken out by end of year without a doubt.
Peter, that's of course the story with gold, but how do we not talk to you about crude? Who would have thought that crude would have it so rough this year, right? Where are your bets? We've seen a little bit of a recovery again in overnight trade, but for the year, crude remains lower. For the next 6 months, do you feel like there could be a recovery on crude prices and hence it becomes a long trade, maybe even between now and the 18th of September and maybe even a slightly longer time horizon?
I think there's many answers to that, Samina. First off, remembering where we were, you know, as far as that October situation last year, Israel and the situation there. So oil went for a big run up over Christmas, and then naturally it was sold off from that, you know, early 90 sort of number, and it's really cratered all the way back. Geopolitics are going to play a part, but we've got to look at the structural weakness from a global economic conditions, Eurozone, and certainly from China's consumption. So this is all a factor going forward. If geopolitics really ratchets up in the months ahead, then this could greatly impact price. So I don't think it's worse days. They might be behind us, and I feel as though you could see a leg up if things develop on that geopolitical front.
Peter, just, looking forward, and we're talking about what the big factors are going to be. I think we would be amiss if we don't talk about the U.S. elections. In fact, even as we speak right now, Kamala Harris is giving her landmark speech at the Democratic National Convention, and we have live footage of that coming in as well. So all eyes on Trump versus Kamala. This week, the likelihood of Kamala coming in is inching up. It's not seeming as impossible as it was maybe a couple of weeks ago. How much of a difference does that make to how not just US markets, but the global markets move coming ahead?
Well, we're at 2.5 months away, Tamanna, from election day. So there's the first part. It's narrowing down from a timeline perspective. Yes, certainly Kamala Harris, and we've got to be conscious of that. She's now running the show, or pretty much going to be the front runner, one would think, at the present time anyway. So as that may gain momentum as far as an attractiveness to the voter base, I think that this is all going to add, I think, much excitement to the markets over the next matter of 6 to 8 weeks leading into October, because of a rate cut policy, because of an election. All of these factors are going to, I think, increase volatility. That's all I've put out there. But I think it's going to be an interesting race, and we haven't got long to wait to get a result.
Right. Very lastly, Peter, I think the China story keeps haunting us, right? We keep hoping that things will change, the economy will recover, base metals will get a bit of a relief. But there's been no sustainable rally across any of those ferrous or non-ferrous metals. From the way we look at things going ahead, how do you approach the base metal universe? Is there anything here you're constructive on? If yes, can you please share with our viewers what looks good to you?
Well, first off, you've got to be looking at the structural weakness from an iron ore perspective, Samina. That's been really, cratered. So that hasn't been that's been a good trade to be short. But copper isn't too bad. When you're looking at it from a big picture analysis, it languished there at, they're just over 8,000, then it hit the mid eights. Now it's the best part of 91.30. It seems to have a little bit more, I think, possibility as far as, movement to the upside, but I think it's going to be whipsawing as far as volatility again until you get something dramatic. Don't forget, you saw those manufacturing PMIs come out of Eurozone. They were very, very soft. I've got the numbers there, 45.8 for July and 52.10 for the UK. So, when you're looking at a contraction across that Eurozone, and that's motor cars and that's everything hard metal, that's not a good sign, and that naturally flows into the China situation.
Indeed. Thank you very much, Peter. It's always great chatting with you. Have a great weekend, and we will catch you soon. In the meantime, implied Nifty is indicating to a flattish sort of start this morning. Don't expect fireworks. We've had a pretty good run for the last 6 days. Remember, last Friday, the market saw a nice breakout, took us to higher levels. And of course, we've gradually crawled back to levels of 24,800 all the way from nearly 24,000 in the last few weeks. So it's been a good run. It's been a dream run. Bulls have been in control. The broader markets have outperformed. And it's been a broad-based rally. Along with an up move, we've also seen volatility declining, which usually is a very good sign if you're long on the markets. The big Q, like Tamanna mentioned, is going to be the Jackson Hole Symposium. Earnings season is behind us, so what you're going to be doing is being driven by global Qs over the next couple of weeks, or from now up until the 18th of September. Well, in terms of what is expected, what we saw yesterday, like I said, we gained for the 6th straight day. The VIX index has declined every single day from levels of 23 to 13. Very comfortable if you're a bull. Apart from that, the Nifty has been consistently closing and making higher highs and lower lows, which really means the range of trading is very gradually moving higher as we see it. A sustained close about 24,800 could be now taking the Nifty back to levels of 25,000. Well, in today's day of trade, what's expected, like we said, it's a muted session across Asia. Traders may not want to be very ambitious or aggressive in terms of taking trading positions ahead of that big Jackson Hole meeting that's lined up later on in the day. The reaction of that, of course, will be seen on Monday. You've also got the weekend ahead, so it'll be a quietish Friday is what I would expect. Some amount of profit taking cannot be ruled out. Sectors that did really well yesterday, so consumption, pharmaceuticals, some of your chemical names like Archean, had a good run. Those counters may sell off just a little bit in today's day of trade. So all in all, don't expect too much. The expectation is we should maintain the range of 24,750 on the downside and 24,800 on the upside. Bank Nifty has been trying and struggling to play catch up, but it's not been half as good as the way most people would like it. Going into the next week, of course, the hope is that Bank Nifty plays a little bit of catch-up trade in the session. But all in all, that's how it looks. Quiet Friday, and I don't think anyone should be complaining because while I know, Tamanna, when you quantify it on daily moves, it doesn't look phenomenal, but a point-to-point return over the last 6 days has actually not been too bad. We've done about 400 odd points on the upside. And the good news is it's coming in on good volumes, it's broad-based, and more importantly, volatility is declined. So that's comforting, I'd imagine. Yeah. And earnings season is behind us now.
Earnings season is behind us. I would just add FIs turned buyers yesterday.
I think they do this every 4 days. I'm beginning to think it's a trend.
We'll pull up the data as well, actually. After quite a few days, FI turned net buyers and bought in about 1372 crores. DI is, of course, 2,972 crores. Not that you had too much of a move up yesterday because it was largely banks holding up. But in terms of stocks which you should watch today, I'm going to start by talking about Zomato. Zomato, because it was the stock of the morning yesterday. It opened up and then actually ended with about 1% down. Now, soon after that, or after markets closed, there was a tweet out from Dipinder Goyal of Zomato talking about how they're shutting one product called Zomato Legends. Now, you will recall Zomato Legends was essentially where they deliver the most famous food of any area or city to anywhere in the country. And what he's come in and said is that the company is unable to find a product market fit. That's why he's shutting it down. This was launched as an intercity food delivery service, and they tried to make it work. They tried to hack it for quite some time, but it hasn't worked out. Now, I think that would actually be seen as a positive rather than a negative, because it also displays the ability to recognize when a product is not working and then just say, yes, it's failed to take off and just shut it down. Fresh set of notes out also today, and I'll just pull up what Citi is saying, on Zomato, not really on the Legends point, but of course on the buy from Paytm and the going out business. They say the acquisition of Paytm ticketing business is moderately positive, and I think that's important to remember. They're not going gung-ho, but they are saying that Zomato will benefit from the over 1 crore users of Paytm's ticketing business. They will focus on gaining segment market share, and that is there for the taking. Their target price, I think, is set at about 300 rupees, and Zomato at 257 right now. So I'd watch for that stock for 197 as well, which really gave up most of its gains yesterday after really opening up, but was 4% down finally. And Citi actually has a note out there as well. They've reduced the target price on Paytm. So Zomato Paytm pair once again in focus. I talk about FSN, Nykaa, because you have, I think, one big buzz right now is promoters and what they're doing with their stake sale. And here, Nykaa's promoters will be selling a 1.4% stake in a block deal. That stock was mildly down yesterday. You might see, because it's a promoter stake sale, you might see again lower hit on it. The floor price is set at 198 per share, which is really below the market price right now, and indicates a discount of about 6.27% of closing price. So you might see some pressure in Nykaa coming in today. They of course want to raise about 810 crores or $96 million. On the other hand, let's talk about Adani Power. And, it's an important story coming in on Adani Power as well. In fact, I think you have two Adani stocks in focus today, or two group stocks in focus today. One is Adani Power, Samina, and the other one is Ambuja Cements.
Yeah, and Ambuja is a big one. Talking about blocks, we've seen 1 lakh crore of blocks in the year 2024, and this has largely come from promoters selling stake. In this one, it's Adani Group's arm, Holderant Investments, that plans to divest $500 million of shares. Now, who is Holderant Investments? It is the holding company of the Adani Group, of Ambuja Cement. Of that, of course, 70% of Ambuja is owned by the Adani Group. Of that, 50% is owned by Holderant. Who is Holderant? They used to be the erstwhile Holcim Group that was the owner of Ambuja Cements. Of course, when Adani Group acquired Ambuja, it was done through the acquisition of Holcim. They are looking to divest, not too large or not too significant in terms of the size of the divestment. It stands to the tune of 2.84%. After the divestment, the promoter group will continue to hold 48.06% stake. The value of the deal is significant. It's at about 4,197 crores, and the floor price of the deal is 600 rupees, which is an implied discount of 5% to yesterday's close. Well, let's take you through why the promoter could be looking to divest some stake. Of course, the big reason being they want to keep cash ready, largely to be prepared in case of any sort of acquisitions or opportunistic investments that they could be looking at doing. Well, Adani Group promoters, of course, will want to keep that ready because remember they have made a bunch of acquisitions in the recent past, Penna Cement being one of them, where of course that was supposed to be a strategic deal in that sense. So keep money aside, keep it ready. If something comes your way, go out shopping and pick it up. Well, we also believe that the purpose of the other ideology could be to diversify the shareholding base, to bring long-only investors who actually significantly and strategically rather understand the infrastructure business, not just from an investment horizon. So that is the reason why you are seeing this block take place. Quick disclaimer, the channel you're watching is owned by the Adani Group, and of course Ambuja Cement is a sister concern. Well, apart from Adani and Ambuja Cement, the other big story to track on the block side, okay, we'll come back to the other block deals because that seems to be the theme these days, at least post earnings usually. But it's Adani Power. There's lots of news on that front too.
Yeah, Adani Power, and in a recent development, they have received an NCLT approval to acquire insolvent Hindalco Amarkantak, which notably operates a 600 megawatt thermal power plant in Chhattisgarh. In fact, Anushi is coming in with more on this. Yes, Anushi?
Hey, morning, Tamanna. So, as you mentioned, Adani Power will remain in focus today after it has acquired the insolvent thermal power plant, which is Hindalco Amarkantak. Now, this is after it has received the NCLT approval, and so Adani Power will make this acquisition at an upfront cost of about 4,100 crore, with the expectation that the deal will be completed in the next 60 days, and that with the target set at about October 20. The funding which we are looking is going to be from the internal accruals of Adani Power, and with this they'll also be repaying the existing debts of Hindalco, which include top creditors like PFC, RAC and IDBI Bank. So Adani Power has had a history of strong turnaround by acquiring these distressed firms. With this acquisition, the combined total operational power generation capacity will increase up to 15,850 megawatts. Just more about Hindalco Amarkantak over here. As you mentioned, it has an operational of about 600 megawatts thermal power plant in Chhattisgarh, and it supplies electricity to Haryana and Madhya Pradesh. The company is currently in working phases to increase its capacity by almost double, which is 1,320 megawatts under its phase 2 development. So if we look at the deal size, so the company is paying about 6.8 crore per megawatt for its operational capacity, and the company is paying about 2.1 crore per megawatt for both the operational and the potential capacity which will be added.
Right. Anushi, that's of course great. We've got the details, we've got the numbers, but why this buy? What is so strategic about this acquisition that Adani Power has gone after?
So, Samina, there's a couple of reasons as to why the company is making this acquisition. As mentioned, 600 megawatts already in works in operation for Hindalco. Phase 2 already has about almost double the capacity, more than double in fact, 1,320 megawatts in works. So, there's a strong capacity addition that is taking place over here. Other than that also, if you have to look at why it is acquiring these insolvent plants, so greenfield capacities take around 5 to 7 years to be built. But if Adani Power is acquiring these stressed assets, it takes around a shorter period to do the same of this, and this is again with a reduced upfront cost to acquire these lands, buildings and equipments. And usually the stressed assets that we are looking at are also sold at a discounted rate as compared to making a new whole field greenfield capacity addition that we are looking at. Other than that, the focus also remains on the overall economy. Indian thermal power capacity remains on the higher side. There's high demand for it. 80 gigawatts of additional thermal capacity is required, with 49 gigawatt opportunity still untapped over here. Even if you look at Adani Power's capacity, that current capacity stands at about 15,250 megawatts, and this is across 9 states. So with this acquisition, it is also adding areas like Haryana, Chhattisgarh to its records, and now it also has a total locked-in capacity of 4,720 megawatts. So with this addition, this 15,250 megawatts will go up to 15,850 megawatts, and there is 1,320 megawatts already in works in the phase 2 development. So these are some of the reasons as to why they're making this deal and why it is important to buy such stressed assets for Adani Power in general.
It's all about expansion and spreading your wings. Anushi, thank you very much for that. That is, of course, Adani Power and the fact that it's got the NCLT nod to go out and acquire Lanco Amarkantak Power for over 4,000 crore rupees. In terms of other stocks and blocks, because that is a talking point, is Kalyan Jewels. And I want to just quickly pull this up because we talked about a significant block that was anticipated on the stock yesterday. And usually if the block is coming in at a discount, you would imagine that the stock would move lower. In the case of Kalyan Jewellers, it actually gained 10% on a day when the markets ended positive but did not see a euphoric rally. Now, let's tell you why that happened, right? With Kalyan Jewellers, you had a foreign investor called Highdale Investment that sold a significant chunk, 6.5% to be precise. But guess who's come in? Very big institutions have gone out and acquired that 6.5% stake. In fact, they've lapped it up on Kalyan Jewellers. A couple of them being Nomura, which acquired about 2.5% stake in that block deal yesterday. Along with that, you had GIC and a local fund house, which is Motilal Oswal, that also opportunistically invested into Kalyan Jewellers at a 5% discount to a day before yesterday's closing price. Of course, now we're out by 15% in terms of what we saw. So, great mention because this is a big deal, right? 6.5% going off is significant. But of course, strong hands coming in to acquire the counter. Along with that, a quick mention on PNB Housing Finance as well. This moved in a similar fashion when the investor looked to sell stake 2 days ago. In PNB Housing Finance as well, and we do know that it's government of Singapore that has come out and picked up stake from Asia Opportunities that it sold. So again, a significant hand coming in and investing in PNB Housing Finance and also Kalyan Jewellers, Tamanna.
A lot of brokerages on radar today, and it's otherwise a bit of a quiet day, but I thought this UBS note on TVS Motors was interesting. Remember, they launched their new product, Jupiter, the new Jupiter yesterday. So UBS has retained a buy with a target price of 3,200, an 18% upside. And they say that the new Jupiter is a significant upgrade from older models and peers. This was, remember, launched first in 2013 and led to a significant turnaround for the company. So it's a new version of it which has been launched. Many of the features cannot be replicated by peers in the near term, according to UBS. And they say that the new model can add between 15 to 20,000 additional pieces in volume growth. They've raised their domestic volume forecast at 14% versus 11% earlier. And they say that the model is 80 basis points positive PLI impact on margins. So there's a clear impact on margins as well. Brand new EV and a foray into electric three-wheelers in the next few months could be seen, and that's a catalyst as well. So TVS Motors one to watch out for sure. The stock was already doing well yesterday after that Jupiter launch. Overall, I think India Auto will be in focus. There's a Jefferies note out today. They're talking about Ola first, saying the market share has slipped from 49% in the June quarter to 33%. So that's quite a slide there. They say Ola remains the number one player. TVS and Bajaj have gained 4 to 7% market share, and the current market share for TVS is at 19% versus 15% in Q1. Bajaj is 18% versus 12%, so a big up move there. And of course, the e-bike launch for Bajaj is positive. Motorcycles have formed 63% of the volume. So I think two-wheeler and auto in focus today for sure.
And I think if the market is looking for a sector to go up, it potentially could be this one. Well, just a couple of updates coming in from the IPO space. I remember InterArc Building Products IPO closed yesterday. Allotment was done as well. It was subscribed 93 times. So just a quick update that's now behind us. The listing is what we'll be looking forward to. With regard to Orient Technologies, it was the second day of the IPO yesterday, and it's already been subscribed 16.96 times on day 2. So it's been a significant reception in that sense, lapping it up on InterArc, and of course we saw that last week with Saraswati Saris, the week before with Orient Electric. Today, of course, it's Orient Technologies on day 2 that has been subscribed nearly 17 times. Two other smaller counters, but usually move on news like this, is Railtel. They bagged an order worth 52 crores from the UP Police Recruitment and Promotion Board. Not sure the details of this order, but it's to the tune of 52 crores, and you may potentially see the stock reacting to that news flow. Apart from that, Shriram Finance Finance, they've got the approval to sell the entire stake in Shriram Housing Finance to Mango Rest Investment, which is an investment arm of Warburg Pincus.
So a lot of stocks to watch. We're going to get into the F&O segment in a bit. Just before we do that, we had two very interesting conversations, and we want to play out a bit of that for you. Because remember, you had the RBI MPC minutes, which were out yesterday, and we caught up with two members of the MPC, outgoing members, actually, Jayant R. Verma and Ashima Goel. And we talked to them about whether growth is being sacrificed in pursuit of inflation control. Listen in to what they said.
China, for example, when it was going through a similar stage of its demographic transition, was growing at 11-12%. That is the growth that is possible because there are new entrants to the workforce. The workforce is expanding. There is need for creating employment. The economy has to grow a lot faster during those periods when the labor force is rapidly expanding. And then 7% is not enough. We need to grow more than 8%. So that is one side of it. The other side is, what is the growth rate that the Indian economy is capable of? What are the barriers to that growth? And I think we have gone through a series of reforms in the last several years. The digitalization of the economy, the investment in public infrastructure, all of that steps up the potential growth rate of the economy. So whether you look at it in terms of the growth rate that we need or the growth rate that India is capable of, that would be a number in excess of 8%. And then you put 7% against that, what you come up with is that the fastest growth rate in the world is still not good enough. And one of the things that is probably holding back growth is excessively restrictive monetary policy. And we need to be on the guard against that and avoid excessive growth sacrifice at this point of time.
This is what a lot of people say, that growth is high, it is relatively robust, so there's no growth sacrifice. But the point I'm trying to emphasize is that our potential growth is even higher. So there is a growth sacrifice. Compared to last year, we're growing 1% slower. And we all know that China in its catch-up period grew in double digits, right? So in a period of structural change, you don't know what the potential output is. And if trend inflation is downwards, then that means that you are below your potential output. So to that extent, there is a growth sacrifice. And also because it acts with a lag, right? If real interest today, especially in terms of core inflation, are pretty high, it's going to have an effect down the road. And at that time, it will be too late to do anything about it.
Welcome back. You're watching India Market Open. It's expected to be a quiet Friday after the markets have slowly and gradually crawled up over the last 6 trading days. But don't expect fireworks today. But the F&O data will be important to give us some direction of what lies ahead for our street going into next weeks of trade. We'll try and simplify this. So of course, you can generally get a understanding of what is happening in the markets in terms of the technicals and the futures and option space. The Nifty 50 August futures are trading at a premium, but there's a decline in open interest. What this usually means is that while the markets are looking set for a higher up move, there could be limited upside in that sense. On the other hand, Bank Nifty has been literally conspicuous by its absence over the last few days, but a similar sort of trend. It trades at a premium, that is the August futures, but there's a decline in open interest, indicating that the trend may not look headed up for now at least. Well, this is what catches my eye, and it's exciting because at the start of this month, remember, or towards the end of July as well, it was 25,000 that saw maximum activity in terms of calls. But look at how things have changed in the last couple of months. It's actually levels of 26,000. If I can pull that up, that would be useful. But 26,000 is where we saw maximum call writing and maximum open interest in terms of trade. Along with that, that was followed by levels like 25,000. That still remains an important level and more of a near-term resistance for the street. Call writing and maximum call OI continues to remain at levels of 25,000. And that's been the trend all through June, July, and now, of course, August. So no significant moves being made on the index. 25,300 as well is an important level because that could be the next stop after 25,000, and that is evident in terms of the call activity that we've seen. Put activity usually gives you a sense of where the resistance sits for the market, and in this case, it is 24,500. So the range has moved slightly higher from the 24,000 in early August. Your maximum put OI is being now very obviously visible at 24,500. That is followed by 24,700 and 24,600. So the first level of resistance remains at 24,700, followed by 24,600, and then your next support sits very comfortably at 24,500. So that really is where your Nifty picture is. It's going to be range bound. It continues to be in a tight range. 26,000 on the upper extreme is where you've seen call OI, followed by, of course, 25,300 as well. Well, these are stocks, and these are where the action really sat. Long trades across the board. There's an increase in open interest, and there's been long built up. So you've had Deepak Nitrate, JK Cement, sector agnostic really, Ambuja Cement and Interglobe that have seen a big bump up in OI and long built up as well. On the short side, there are a few stocks you want to watch out for. So RBL Bank, Indus Towers, Crompton, Vodafone, post of course those numbers that we saw, monthly data that we saw for the telecom majors. You've seen some short calls being taken. There's been some long unwinding in stocks like SAIL as well, so you could imagine these stocks to top out in today's trade. Well, let's go across to our guest now, who's of course got some exciting ideas for us. We've got Amar Dio Singh, who joins us this morning. Amar, good morning. I usually land up saying Amar Singh Dio, so sorry about that. But let's start with the index. You know, we've done okay, I'd imagine, the last 6 days. We made higher highs, lower lows, and I think that's comforting for the bulls. And all of this while the VIX has been declining. Today should be a muted day of trade. The F&O data also reflective that the upside, the immediate next stop could be 25,000 on the index. What is the strategy that you'd consider adopting on the futures and option side on the Nifty?
Very good morning, and thank you for having me on the show. See, overall, I've been consistently saying that Nifty has been on an uptrend and is very strong on the long-term charts, intermediate-term trend. Short-term, yes, we were seeing some sort of consolidation, but the biasness definitely was in favor of the bulls. And also, what we were witnessing is that across sectors and across multi-caps, we were seeing some sort of positive momentum. Yes, some of the heavyweights like HDFC wasn't really performing or isn't really performing, but that has been compensated to a certain extent by the IT stocks, to a certain extent by Reliance, to a certain extent by ICICI. So having said that, overall, if you ask me, the trend is definitely positive for Nifty. But if you go by the derivatives data, so somewhere or the other, we are seeing that the put-call ratio for the August expiry is around 1.32. So that is primarily bullish. So we'll have to see how that plays out. And global factors have also been positive ahead of the US Fed meet next month, where expectations are of a rate cut there. So that's what is helping the markets. And overall, I would say that being on the long side, if you ask me about the levels, so somewhere on the upside, Nifty is inching towards its all-time high. That was around 24,984 or so, 25,078 or something. Yeah. So it is very close to its all-time highs. So effectively, it means is that any pullback on the downside can be a buying opportunity. Now Nifty's got very strong support coming around the 24,600, 700, which was earlier a key resistance. That's been taken out, so that acts as a support. So one should look at on any dip as a buying opportunity. And upside seems to be capped right now around 25,000 levels or so.
Well, they're range bound, and that's pretty much what it's been now for quite a few weeks. Let's talk stocks. I believe you have a long trade on SBI Life. The last 5 days, you've seen insurance companies do well. SBI is up. SBI Life is already up 5%. Naked longs, which means you believe that the stock is going to go higher, so you would be initiating very simple long trades in the future side?
Yeah, because if I look at the SBI Life, what we are seeing is that the momentum is very strong on the intermediate term trend. The stock has witnessed some significant breakout on heavy volumes. So sustaining above these levels is something which is very crucial. That's why I'm saying that one needs to have a slightly longer time horizon and not go for the August series and go for the September series for SBI Life. So any pullback of 5 rupees or so, because currently it's around 1806, so around 1795, 1800, that can be a good buying opportunity with a stop loss of 1739 and a target of 1895 on the upside. Because if you look at the markets are poised for trading higher, and SBI Life is definitely looking positive on the chart. So that's the first trade.
I know all our viewers who are tuning in, this is a F&O special segment. But of course, what I'd like to also say is that even if you don't want to take on a position on SBI Life in the future space because it's a naked long that you're doing, you can also buy this in the cash market. And that's on back of Amar Dio Singh's advice, where he's constructive on SBI Life. Without leverage, of course, is when you would do a cash trade on the same stock. M&M as well. Amar, constructive on this one in this case, but you're buying calls here.
Yeah, correct. So M&M, again, it's a September call. So I'm taking a slightly longer term view because next week we'll have the August expiry. So M&M is very strong on the charts, looking technically very strong on the charts. It's had a breakout on the monthly charts as well on significant volume. So this is one stock one can keep a close watch on. So one can look at a 320 September call option at because currently it's around 8.5. So any pullback towards 6, 7 can be a very good entry level for the stock with a stop loss of 1 and a target of 18 on the upside. Again, this is for the September series. So one gets a significant window of opportunity in terms of time.
Right. Just to recap, SBI Life and M&M are both for the September series, right, Amar?
Yes, that's correct.
Right. Okay, thank you very much, Amar, for that. So those are 2 long trades coming in on SBI Life. That is going to be a futures trade with M&M, of course. Amar recommending you buy calls with an anticipation of that hitting levels of 18. It currently trades at 6 to 7 in the August series, in the September series. A stop loss, of course, far out of about 1 rupee. So that's what we have in the F&O space. Tamanna, it's back to you guys.
Yeah, absolutely. So that's the F&O story, but just a few brokerage reports to keep an eye out on this morning as we prep you for the trading day this Friday. Harsh joining in to talk about what notes are saying on Zomato and Paytm. The reverberations of that deal continue even a day later. Harsh, is the outlook a little more, I would say, stable, not as gaga positive as it was yesterday?
Well, it seems like, Tamanna, because what we've started to see is reports starting to trickle through with regard to revisions in target prices. And that's the interesting piece that's possibly just playing out. So, first off, we've got Citi on Zomato. They retain their buy, target price up from 280 to 300, which is a 16% upside from yesterday's close. They believe that this acquisition of Paytm's ticketing business is moderately positive, is how they term it. The 1 crore users obviously go in and benefit, Zomato right off the bat, which is again a positive for them. They also believe that there will be a larger focus on this segment coming from Zomato, and there will be a focus on gaining market share. Of course, they've done some work organically, and the growth organically is stronger than the growth on the acquired business. But nonetheless, they should therefore focus more on this business going forward, is what Citi seems to believe. Also, they are flagging off, they're highlighting that Zomato has a very strong execution track record when it comes to acquisitions. So they are keeping their eye out, moderately positive clearly, and up their target price from 280 to 300. On Paytm, slightly different, if I can term it. They've upped again their target price from 410 to 440, but that is only on the premise that 30 rupees per share is what Paytm has received as consideration for the sale of its business. They've entirely factored that straight into the target price. They believe that valuations slightly better than what they had anticipated in terms of their SOTP valuations previously, and therefore this increase in target price justified according to them. They also believe that the shift towards the distribution business for payments and financial services is a positive, but the commentary from there does not seem very, very positive from Citi's side. They watch out for resolution of regulatory bottlenecks, that they believe is the key, and they also value the company at an unchanged EV to EBITDA of 30 times. So that they've not really changed despite the shift in terms of focus. They continue their sell rating. Hike in target price though.
Thank you for that, Harsh. That's a sell call on Paytm, but of course with a high target price. Well, we'll talk about all that and more, and of course focus on the top trades and recommendations for our viewers this morning. Kush Bora, founder of kushbora.com, joins in. Morning, Kush. Thanks for joining in. It's been positive for the last few days, right? It's been a broad-based rally. Of course, it's been no runaway gains, but we're up about 2% in the last 4-5 days. From where we stand right now on the index, 24,600 seems so far away. Do you feel like 25,000 is in sight in a long trade for the September series? I'm saying should be a good trade.
Sure.
On the Nifty.
First up, morning Samina, morning Tamanna.
Tamina?
I'm so sorry. I thought I'll probably squeeze in one wish itself, but too bad of me.
Coach, I'm going to start calling you Bush then. All right, go ahead.
Every time I had a penny for that. But no better place to be, on a Friday morning, right? You're right, Samina, in the fact that, the reversal on the Nifty has been sharp. Now, let me confess to something. When the downturn started, even I was of the belief that, perhaps 22,000, 22,500 are the levels that, could be tested. Not just in India, the global markets themselves have actually shown a very resilient turnaround. And India has obviously outperformed even from that perspective, where, where the Dow Jones slipped about nearly 7% from the highs, we slipped barely, 4.5%. So I think the only strategy that's working in the market is, buy the dip. Right? Or buy and hold, if you will. So these are the only things that are really working. You can't make money sitting on the sidelines. You can't make money, going short in this market. So you have to buy the dip. Now, that said, I think things are starting to look a little more attractive. Yesterday, during the closing show, I was saying the exact same thing, where I think 25,000, the last time around we got there, it was more of a touch and go. This time it'll be a speed bump where we'll perhaps go ahead and, crash that door down. Now, Harsh and I also have been having this conversation that, when does 25,000 come in? Could be today, could be next week, but I don't think that's important. What's important is the trajectory and the trend that we are seeing. Nifty's taken support at the 50-day moving average, rebounded from there without any kind of meaningful correction, especially given the context of things. So I think 25,000 is going to be a speed bump. We could very well get there by the end of next week. But what I'm comforted and happy about is the fact that we're respecting support.
So just in terms of actionables, at 24,800, you're 1% away from life highs. Do you go long on the Nifty at these levels? Today should be a day where you'll get a flat start. So it could be opportunistic, I'd imagine, if you're so convinced that new record highs around the corner.
For sure.
Okay.
Of course, logically, mathematically speaking, any dip would be, a much better position to get into it. And that's the conviction that, even if a 150-point dip sort of comes in, there is still that opportunity that you go ahead. As long as 24,500, 24,400 is held, you stay long on the Nifty. And I think, there is, the index is perhaps turning a corner, and, 25,000, as I said, is perhaps a speed bump more than, like a stopper.
Okay, so 25,000 is a speed bump. Let's also get a view on the Bank Nifty, because the Bank Nifty, looking positive in yesterday's trade. Sudeep Shah also joining in today, Deputy VP Head Tech and Derivatives, SBI Cap. Aditya Shah, founder Hercules Advisors, also comes in on the conversation. Welcome to both of you. Sudeep, let me start with you and your take on Bank Nifty and what position you take right now.
Good morning. Tamanna, sorry, I just forgot.
Are you doing that on purpose?
Today it's just this thing. It happened with Kush. It happened with me.
I think the next one to go is Aditya. Might as well.
We're waiting. Okay, go ahead, Sudeep.
Yeah, anyways, once again, good morning to everyone. See, what's happening with the Bank Nifty is last 7-8 days, except yesterday and day before yesterday, we have seen Bank Nifty trading between 49,700 and 50,500, 50,700. Every time there was a spike to that zone of 50,700, there was some selling pressure. But last 2 days, we have seen Bank Nifty closing at the highs of the days. And we are probably closing that gap that was created on the 5th of August, the downward gap that had opened. And here, see, within the Bank Nifty also, there is one interesting data point which I am able to see is that while Bank Nifty is yet to break out of that downward sloping trend line, the private bank index has already done so. So that is the reason that is giving me more confidence that yes, this time around Bank Nifty could take support at 50,600, 50,650 zone, and it could inch up higher, closer to 51,500, 51,700 in the coming few sessions. So while IT after a big move could go into a bit of consolidation or could trade on the sidelines, it could be the Bank Nifty that could support the markets from here on.
What about you, Kush? Take on the Bank Nifty. We spoke about it on the closing show yesterday, and you were quite constructive. That trend continues?
Just before that, if Aditya also somehow slips up with your name, it might seem like a
conspiracy.
Conspiracy.
I think he's got enough time now, so no marks for getting it right. But yeah, okay.
No, I actually agree, with Sudeep here. There could be, an argument made towards Bank Nifty being, range-bound consolidative, perhaps not giving that breakout. But if I look at a few technical parameters and the kind of moves that we've seen, let me just give you a couple of numbers, right? For the first time, we've had a closing above 50,800 in the last about 8-10 odd sessions. Exactly after a month is when we've got a one full clear daily candle above the 20-day moving average. Now, what some of these things are indicating, and also a couple of other parameters that we track, what this is indicating is that these are green shoots. Now, these could well fail, but right now the conviction is building, towards the fact that the Bank Nifty could rally from here on, and it could be as high as 51,800, 52,200. Now, here too, the only caveat will be that 50,500, that support zone should be held in the interim. But if I were to take a bet, and as Samina, you asked me, an actionable on the Bank Nifty too would be to go long on the Bank Nifty. The risk reward ratio here is extremely favorable. I would actually perhaps even consider that perhaps Bank Nifty might lead this rally, but then it's got problems of its own. But maybe in support with IT, Bank Nifty, IT, these could perhaps be the two indices that could push the Nifty beyond 25,000. So constructive on Bank Nifty as well.
Okay, Aditya, good morning. And okay, let's talk about, and I'm going to start with your take on the auto sector. A couple of notes out today on TVS specifically, others looking at two-wheelers as well and the whole two-wheeler stack. So Jeffrey's note out right now, and a lot of buzz in this sector with a focus on EV, etc. What would be your ranking of all the players? And let me add the newly listed Ola Electric in this list.
Tamanna, we are seeing a little bit of a slowdown on the auto sector. We've seen inventory piling up on the four-wheeler side of it, and OEMs slowing down their production. However, on the two-wheeler side of it, still it is going strong. So I'm happy with the two-wheeler OEMs. Within the two-wheeler OEM space, the pecking order for me would be number one would be Eicher Motors, number two would be TVS Motors, and then we will go on to Hero MotoCorp. There is a little bit of froth that is getting developed on the Ola Electric stock. We've seen that the stock has rallied nearly about 80 to 100% ever since it has got listed. Even though the results were okayish, they were not too bad, but they were not too good either. So a lot of froth is getting developed on the Ola Electric stock. So I will advise retail investors to not chase this stock. It is already trading at about 80,000 crores of market cap, where the company is not guiding for any profitability per se. So stay away from Ola Electric per se, and you can look at the other auto or two-wheeler OEMs. But the real money can be made in the auto ancillary space, where companies like Sona BLW or Motherson, those are the kind of stocks that you need to really be invested for the longer term.
Sudeep, what are your top stock recommendations this morning? What have you identified that could make good trades intraday or maybe for the next series too?
Yeah, so see, there are a couple of them which are on my radar. The first one is Indian hotels. We have seen some pullback in this hospitality stocks. So a lot of other hotel stocks also are showing some sense of a breakout from a consolidation that they were witnessing. If you see the stock of Indian hotels, that stock was in a big uptrend since November 2023. It went on up to June 2024. Then in the last 1.5 to 2 months, the stock slid into a period of consolidation between 600 and 640. However, yesterday we have seen a downward sloping trendline breakout, which also marks the end of this consolidation. And also the futures activity are hinting that this stock could do well in the next couple of weeks also, if not even days. So positionally, I feel Indian hotels can be bought with 628 as a stop loss on the downside. The targets on the upside could be 665 to 680. The second stock is from the consumption space, that is Tata Consumer. See, now if you see Tata Consumer, the stock had given a big move from 1080 to 1240 from between June and July. And post that, the stock has been consolidating quietly, minor profit booking from higher levels. But despite that, the stock has not broken down below its 50-day moving average even once in the last 1.5 to 2 months. And once again, last 7-8 days consolidation, which was happening yesterday, we've seen a breakout of that. The daily weekly charts are already strong. So I feel from the current levels, this is a good stock from a positional perspective to be bought. 1180 could act as a stop loss on the downside. 1240, 1260 are the probable targets. And it's both these stocks, whether it is Indian hotels as well as Tata Consumer, both are very good fundamental stocks. So I believe that in the current scenario where we need to be a bit of choosy with respect to stocks, it will pay to have a techno-funda approach in both these stocks.
Both are from the Tata Group. Let's not forget that with regard to Tata Consumers, you also the rights issue that finally wrapped up on Monday, and that was at a massive discount to the current price, closer to levels of 800. And that overhang now that is behind us, you could expect Tata Consumers to play catch up, because the last month when FMCG and consumption names have done well, Tata Consumer has been on a back foot, and it's been the only stock that's not performed. We'll take a break on that note. We'll come back, track pre-open, and take you through some more trading ideas as we gear up for trade this Friday morning.
welcome back. We're just a few minutes away, actually a minute away from the implied open this Friday morning, from the pre-open session, and we look like we're going to have a completely flat day, perhaps positive. Kush, let's talk about not just some of your picks, but some of the updates for the stocks that you have, been setting out for our viewers last few days.
Sure. Let me start with the stocks for the day. HDFC AMC, this stocks actually has been on a very steady uptrend for a while now, and what's interesting is that in the last 3 sessions, despite the kind of up move, it's actually gone further, added to those gains on the back of good volume. So I think from a near-term perspective, this is a good trade. In fact, even positionally, even if someone wants to consider a positional trade, I think HDFC AMC will fit the bill. 4600, 4775 are the targets to look at. 4220 is where you place your stop loss. From the cash segment, you've got Electro Steel Castings. Now, this stock has had a good run for the last 8-10 sessions. It was consolidating, but yesterday we saw a big move on this, again on the back of good volume. So I think from a trading perspective, 233 rather, and 244 are the targets to look at. 209 is where you place your stop loss. Now, as you mentioned, a couple of updates, actually more than a couple, but let me also caveat this with something which is, we usually talk about stocks that have hit the target 1, target 2, right? One of the reasons why we don't talk about stocks which have actually hit the stop loss is because, the assumption there is that if the stop loss is hit, the trader, the investor, the viewers have actually exited the position at the given stop loss. Now, if the stock's hitting the target, the question is, what do you do? Do you continue to hold or do you exit? And hence the update on the stocks that have hit target. So a lot of names here: Genus Power, KIMS, HFCL, Pitti Engineering, Emphasis, UPL, ACI. Let me start with Genus Power. 408 was the target. I think, there was this day when it received a big order, and Neeraj and I had this conversation that if you've got this, 408 that day incidentally was the upper circuit, and the stock was locked in on that, and hence the update that if you've got it and the stock's on an upper circuit on the back of good volumes, you continue to hold on. And today Genus is at 440 to closing, 446, 447 is the opening, and hence the update. So if anyone's got that stock, you should continue to hold, maybe book partially, but now hold with a trailing stop loss.
Just on Genus Power, I think it hit upper circuit on Monday, and I think people would have not gotten because on opening it was an upper circuit. But the good news was Tuesday was not so high. Wednesday, they bagged another massive order, and the stock then again continued to rally. So it's been very strong order wins this week that supported the stock well.
Absolutely, and our call was a couple of days prior,
Monday morning is when the deal happened, and that's when the call came out.
No, that was the update on the call where 408 was the target, and being in upper circuit, what do you do now? Do you sell, get out of it? And our update was that continue to hold on to that one. A lot of other names to be discussed, but I think broadly what I'll discuss, 2 names, which is UPL and ACI. I've been very constructive on UPL, although the stocks had its share of ups and downs, mostly downs, but now it's seeing a revival along with a lot of other chemical names, right? And 570 was the target. 580 is where it closed yesterday. 586 is the opening that we're looking at. I'm very positive in the sense that 575, 580 was a very strong supply zone. Beyond that, the momentum will kick in, and I think that's what we're seeing on screen as well today. The other stock is ACI, Archean Chemicals. Yesterday, I think, was it perhaps day before, when we discussed the stock with a target of 815. The stock closed at 821. Here too, we are seeing traction. So my suggestion, if you've got the likes of Genus Power, UPL or ACI in your portfolio or in your trading positions, continue to hold on to these. They've made good runs. Now you just want to hold on to these, but with a trailing stop loss in place so that your profits are locked in.
Archean Chemicals is a story in itself. The stock has probably been the only one that's done okay when specialty chemicals as a space has not been doing exceptionally well. They've even posted a pretty good set of earnings when they reported. Despite it being lower than what the street expected, I think the markets are largely looking at the outlook on Archean. But, Archean has been a very aggressive stock that a number of small and mid-cap PMS fund managers have been sitting on. So structurally as well, like Kush said, it looks good. Fundamentally as well, it has a great story going for it. Another stock to highlight this morning is Hindalco. They've undertaken a very significant expansion plan with this investments totaling to over $10 billion across India. We have Puneet standing by with more on this. Puneet, where is this $10 billion going to get spent? I mean, this is significant, and I'm guessing it's across the board for the group.
Well, definitely. It's going across the Indian as well as Novelis operations in the US. And these comments are coming at the back of comments from Kumar Mangalam Birla at the AGM yesterday. So there are three key investment areas where they have identified. The first one's expansion of the aluminum and copper smelters. They have mentioned that this capacity is going to be expanded specifically in the new plant in Gujarat to address the growing demand going forward as well. They are also constructing a copper inner groove facility, which is going to be constructed in the same Gujarat facility as well, and going to be coming on stream by the end of this particular financial year. The second key investment is happening in the new alumina refinery in eastern India, specifically in Odisha. Now the company is planning to inaugurate this refinery by FY27, and it will have a capacity of roughly about 8.5 lakh tons. Finally, on Novelis, they will be advancing several major investments. These would include new rolling as well as recycling plant in Bay Minette area of the US. This expected capacity is going to be coming on stream by late of 2026 with a capacity of about 6 lakh tons. So overall, covering all areas of business for Hindalco specifically, stock might react on this particular news flow. Back to you.
Okay, just to look at what the pre-open scenario is looking like right now, and fairly positive, at least on the Nifty. Some of the buzzers this morning, look at Ambuja Cement up about 4%. Remember, the holding company or the investment arm actually is offloading stake over here. We covered that also in our trade setup. That stock 4%. In fact, a lot of the group companies are doing okay this morning, doing pretty well. Adani Power up about 1.5%. So is ACC. So this clutch of stocks in focus, standard disclosures there, of course. We talked about Nykaa, where there's a pairing of stake, not really by the promoters actually, but by the early investors. Nykaa up 2% this morning. Kalyan Jewellers, remember there was a stake sale, but look at who's come in and bought, and that really is seeing a second day of an up move for Kalyan Jewellers. So the likes of Nomura, the government of Singapore are among those who bought some of that stake. TVS Motors we spoke about, and there's a UBS note out on TVS Motors, which is fairly positive after their Jupiter launch, and that's buzzing in trade as well. So you have a whole set of movers pre-open, which are doing fairly well on that side. Anything that you find interesting here, Kush?
TVS Motor actually looks interesting. There was an ascending triangle formation, that it was getting into 2650, being the resistance band. It's crossed that, moving higher from there on. I think, this is a good breakout. I think the stock could sustain above these levels and, make a move towards 3000 also positionally. So I think, this is one stock that, you could consider, in trade today.
That's going to be one to consider in trade today, TVS Motors. In fact, the day could belong to some of those auto counters as we see it. We've got a couple of reports, and it's insurance that we can't seem to take our eyes off, including traders who seem to be making big bucks on the insurance pack. But Harsh is standing by with Jefferies now, who has a view on India insurance. Harsh, it's now Jefferies, I believe, with a constructive view.
Yes, Samina, but we've had life insurers make a very large move this week. Jeffrey is really essentially talking about general insuring, the general insurance pack. They believe that the larger private insurers will largely gain, and they believe that that is on the back of a multi-year upcycle in motor. Now, motor has been a space where competition has been very strong, pricing has been subdued, and therefore you've seen some participants, especially someone like an ICICI Lombard, over the last 2 years give commentary that they're holding back on growth where motor is concerned. Jefferies believes that ICICI Lombard will be the top gainer on the back of this upcycle and this turn, and therefore they believe that the key beneficiary to look out for within this upcycle, this turn, will be ICICI Lombard. They believe moderation in competitive intensity should aid the numbers for Lombard, and they believe that for Lombard specifically, the claims outlook will be healthy on conservative reserving accounting, which they are doing. Also, they expect an improvement in the combined ratio for Lombard. The combined ratio, a sign of profitability, should drop towards 100% by around 3.7% by FY27. So they are seeing that as a key metric in terms of a lever. And they also believe that other insurers should benefit. They believe that with regard to they prefer rather some distributors, something like a Go Digit, something like a PB Fintech. They've even had, or rather they've initiated coverage on Go Digit. 25% upside from here, 420 being the target price on Go Digit is what they've pulled up. Star Health also, they've initiated coverage, but they believe health insurance will remain slightly subdued. Higher claims frequency will keep the numbers muted when it comes to health insurance. So they've come out with a comprehensive report. They've covered several facets, including some of these.
Health insurance and life insurance in focus. Aditya, are you convinced about the insurance story?
So we are positive on the life insurance side of it, where penetration into the term plan and savings and for pure pay protection products is going to do well for many of these life insurers over the next 5 to 7 years. That's the first point. On the general insurance side of it, I am positive on the health insurance side of it, where a GST cut could come in as early as September this year, and that could provide a fillip to a lot of these health insurers. So I say Lombard is one of the stocks that I'm really positive on in this sector.
Sudeep, you want to come in on those shipbuilder names that were on a breakout and then on a breakdown? This morning doesn't look too bad. They've been trying to find a bottom. Do you feel like you would buy any of these stocks? And I know there aren't too many in the future space for a recovery, and it doesn't have to be a significant recovery, right? For 5 to 6%, any of the shipbuilders that look attractive to you, if they do.
Seeing both, say, Cochin Shipyard or GRSC, they are all on a downward trajectory. Even on the weekly charts, if we see, they are forming lower top, lower bottom pattern. And right now, although they are at important supports now, for example, if you see Cochin Shipyard, 1900, 1950 is an important support zone, being 100-day moving average. So I feel it would still dip a bit on the downside. We could see some pressure here before we see any meaningful any rebound on the upside. So at least I feel it's time. Say for Cochin Shipyard, the resistance is at around 2150, 2170 zone. Only above that, there is any kind of a buy that looks more likely there. Else it could slip from the current levels also, or sell on rise could be the mantra, at least for the next few sessions, till we see any meaningful reversion.
To track today is going to be Poly Medicure. We will be talking to the management very soon. But remember, they did 1,000 crore QIP, which has got lapped up by very quality investors. Lighthouse, which is a fairly well-known private equity, locally, of course, has picked up some stake, and also SBI Mutual Fund. So those are the big allotis on that 1,000 crore QIP that was launched by Poly Medicure to, of course, fund its expansion plans. The stock looking muted as we see right now. Another one, Kush, on the charts, what does Ambuja, Nykaa and Kalyan look like? Ambuja as well, a quick update just a few minutes ago. 2.5% of the block has been completed. Another 2.5% is outstanding, which should be taking place anytime now. But 4%, I think, Kush, recently the thing is that when you see blocks taking place, and even if they're at a discount, the stock reacts higher because I guess it's getting lapped up, anything for relative valuations. But on the charts, Ambuja for the day and Ambuja for next week, might as well.
So to the point about block deals, buy on dips in a different sense, correct?
Yeah. I mean, today if you look at Kalyan, I think the dip as it was came in at 20% lower. So you had GIC and a couple of big significant buyers who managed Nomura, GIC and Motilal who came in at a 20% discount. Luckily for them.
Just on that topic, there's a lot of interest in that space. If you look at something like a PC Jewelers or a Senco Gold,
so
there's a lot of interest.
because the way gold has been moving, right? Muthoot, Manappuram also.
But you would put Nykaa in the same category, or you mean discretionary premium spend? That's the category.
No, I think gold
in particular.
Okay.
Gold in particular. As far as these stocks go, I think Ambuja was making a very firm base. 620, 625 is the level where it was holding on for a while now. 650, it's opening around the resistance mark. So I would not perhaps go and create a long position today. Maybe somewhere closer to that 640, 645 mark is where you get a good entry point. As far as Kalyan goes, I think this is a very clear buy. Might actually seem a little stretched, but it's not actually on the charts. The dip's just been bought into quite aggressively, but otherwise it's a very steady kind of an up move on Kalyan. So again, any kind of pullback towards 580, 575 level should be taken as an entry point. Nykaa, just for the time being, I would avoid, and the only reason being that there is a fair bit of volatility that we've seen in the last 2 days. So let the price action settle. Could be, in the next, in the first hour or so itself. But once the price action settles, do we get a clear view? On the whole, the trajectory is looking north, but perhaps, give it an hour or so to, settle down in terms of the volatility.
Sudeep, quick word from you on Ambuja, and let's add TVS as well. 2 stocks in focus.
Yeah, so Ambuja post this news, which is right now flashing of the bulk deals. So what I feel is last 7-8 days, the stock was under that pressure, under that overhang between 640 and 622. And now with this out of the way, I feel the stock could now head up on the upside. 50-day moving average is around 663. Once it crosses that, this could head up to 690, 695. And out of all the cement stocks, I feel whether Ambuja Cement as well as the Ultratech Cement look really good from here on. So I feel both the stocks are a buy on dips candidate. Coming to TVS Motors, this stock is in a higher top, higher bottom trajectory on the weekly chart as well. And the last couple of weeks, we have seen a decent consolidation breakout about 25-50 levels. And since then, the stock is not...
Right. Sudeep, we'll come back to you. We've got 4 seconds to go for market open. Remember, it's going to be a quiet morning, but it looked like it's going to be towards a positive bias. The Nifty should be aiming for higher levels, but as expected, it is quiet. 24,826 is what we have, largely on expected lines. In the last 5 days, we're already higher by 2%, so we've made quite a bit of a stride, even though it's been fairly quiet on the face of it. 9 points higher on the index, and it's building on from where we see it. And the Sensex also trades flat. The broader market may see some activity. Bank Nifty once again underperforming the benchmark. Marginally lower is what we have it in terms of trade. But who's to tell, a recovery over the next couple of hours cannot be ruled out, or at least an up move in the next few hours. Broader markets have largely been the star of trade as compared to the Nifty itself, and this morning, though there's no outperformance on the mid-cap, small-cap or the micro-cap index. Let's take a look at the breadth and what the Nifty 50 is getting up to. Remember, it's going to be volatile, a swing between either sides, no directional big moves are expected in today's day of trade. The breadth is down, where you've got about 30 higher, where you've got 30 stocks that are trading higher, you've got 20 stocks that are trading with the downside bias. The big winner this morning is Auto. Tata Motors not doing too badly. Tata Consumers gaining for the 3rd straight day with the overhang of the rights issue finally behind them. The stock inching higher. In fact, Tata Consumers has been on the buy call for the last few days by the likes of Chandan Taparia and of course Kush Bora and of course Sudeep this morning on a show. RIL, Tata Consumer, HCL Tech, Grasim Cement is not doing too badly. The breadth of the market, though, as we see it, is seeing a little bit of deterioration as we go along in the first few minutes of trade. On the sell side, tech is looking weak, paints are seeing some weakness, but Tamanna, it's such a broad-based move, right? So no specific trend emerging just yet. But in the last 2 minutes, you can see how the breadth's, sort of deteriorating, if I may say so.
Yeah, turning negative for sure. And I'd be keen to see what's happening in the broader markets as well. And is this all about, stock-specific stories and block deals and promoter stakes, which are actually dominating. Completely flat on the Nifty mid-cap 150, now turning to the red, but very mildly. Let's pull up the small-cap stocks as well. Just about 9 points up. So it's a stock-specific kind of day. Let's see what's working and the stocks in news. Ambuja Cement, let's start with that because obviously after that investment arm stake sale, that block deal being done, the stock about 3% up. Can we just get that monitor here as well? Kalyan Jewellers, the other one. There was a block deal yesterday where you had an investor coming in buying stake. The promoters bought. That boosted the stock about 9% yesterday in trade. But then now we have details about some heavyweights that have come in and bought. So 3% up on Kalyan Jewellers, having a second very good day. RailTel is the other stock on order. Not a very huge deal size, just about 52 crores. But that stock about 3% up. That's from the UP Police section that has given the order to RailTel. We're talking about block deals. FSN Nykaa is in focus. One of the early investors has cashed out, but that stock about 2.5% up. TVS Motors, we've been talking about. This has been buzzing since yesterday. UBS has upped its target price, in fact, to 3,200. That stock about 4% up. JSW Energy, they have a PPA that has been signed with Bangalore Electric Supply. to provide about 300 megawatts and about 1% up on JSW Energy, doing better. Pre-open has maybe come off. Bharat Forge is the other one we talked about. Remember, they had a very steady quarter going by, and 105 crores has now been invested in one of their subsidiaries. That stock mildly in the positive, but the greens are just about holding on this morning, Samina, I would say.
Gains except Vardhaman Textiles, but I have no idea what's happening there. It's a small company, but on the Nifty 500, it is topping the charts with the 8% up move. Raymond is doing okay, 5% higher. TVS Motors on expected lines is also having a good morning. CDSL, not sure what's happening there, but the stock is higher by 4.5%. The traction has been in all of these, non-banking sort of firms which are focused on the equity play. So last week, you had the likes of an Angel One and Nuvama, PSC that were quite active. Today, maybe it's CDSL that's taking the lead there. Raildar and Ambuja holding on to their gains. So that's good news coming in. Shyam Metallics continues its up move in today's day of trade as well. APL Apollo Tubes was your top gainer, one of your top gainers in trade yesterday on very healthy volumes. Today seems to be no different. It's still trading higher by 2% after a 5% up move the stock saw in trade yesterday. GSFC is looking good. Adani Power on buying out, on that buyout news is trading about 1.6% higher. All your Tata Group names are doing well. So from your Tata Motors to Tata Motors DVR to Tata Consumer, Tata Technologies are all trading with a very, very clear positive bias. On the sell side, on the Nifty 500, you've got Deepak Nitrate, which was your top performer yesterday, seeing a 2.5% cut right now. Uno Minda, so mid-cap IT is having a soft day, right? Emphasis, First Source are all trading with cuts of 2% odd. Archean is seeing profit taking after yesterday's very smart move, is down about 1.5%. Mascount Docs once again on the sell side. But fertilizers, defense are some of the names, metals that are trading fairly lukewarmish in trade. Well, Sudeep, is there anything that you've identified in the first 5 minutes of trade? Any opportunistic trades, either on the long or short side?
Yeah, so there's one stock that I feel that could do well for the day or for the next few days. That is Indigo. Yesterday we have seen a decent breakout there. Last 15 days it was consolidating. Now with the crude prices also coming down to $76, $77 a barrel, and which is a big positive for this space. So I feel Indigo on this should be bought between 44.50 and 44.80. The stop loss here could be 4,400 and the targets could be north of 4,600, 4,650.
That's Interglobe, and there have been brokerage upgrades that came in on the stock in yesterday's trade. Actually, Kush, why don't I come to you then? Any quick updates, anything that you've identified in the first 6 minutes?
So, just a quick word on the indices. I don't think the move is as bad. Whatever, early minutes of trade, we've seen some recovery, and I'll take heart from that fact. And that too, it's just the bank Nifty. Nifty's actually practically been, flat.
Maybe that's probably what it'll be through the day, right, Kush? And we shouldn't be expecting too much because one, you've got the weekend, and then you've got the Jackson Hole
Symposium. Yeah. Absolutely. So more stock-specific action. So as far as stocks go, there's one stock that has actually been catching my eye for some time and hasn't really turned into a call. That is Orion Pro Solutions. Now, this stock has been on an uptrend, not a breakaway rally, not a tearaway rally, but a steady, gradual uptrend on steady volumes. I think there's a good accumulation going on in this one. I think that's one stock that your viewers, your traders can have on their radar. If I were to put a target and a stop loss to it from a near-term perspective, it looks like a 2100 kind of a level, which could act as a target. There's a good support zone, base forming around the 1750 mark, 1775, thereabouts. So that should act as a stop loss. Not necessarily a tear-away trade, but more of a positional bet, but something that can be kept on the radar.
Just want to get Sudeep's view on some of the auto buzzers today, and if there's one trend that you would try to hunt for in the market right now, it's autos. That to maybe focus more on two-wheelers. We've spoken already about TVS, but look at a Bajaj Auto this morning, not too bad. Hero Moto. Even on Tata Motors doing, quite okay. Any of these that you think are poised for the next level, Sudeep?
Yeah, absolutely. So Bajaj Auto ticks that list. And see, in case of Bajaj Auto, we've seen a strong up move in the last 7-8 months, right? From 4,500 in September to October 2023 till now. And in the last 8 to 10 weeks, the stock was consolidating between 9,500 and 9,900. And right now, we are seeing a big breakout here on the upside, crossing the previous swing highs also. So I think from the current level, still 9,800 holds. The stock could do well up to 10,600, 10,750 in the coming few weeks.
Well, that is what we are picking up on as we see it. The market's having a quiet morning. There are a few large trades, Nykaa being one of them, the other one being Ambuja. Both those counters trading just like every other one has seen in a block deal day with a higher 3 to 4% up move. Along with that, there aren't too many stocks that are doing anything really, but the losses are minimizing. So, when you open the day, Deepak Nitrite was down about 3-4%, now trading with only a 2% cut. On the winning side, you still have RailTel that's played catch up. A 52 crore deal can do magic, it seems. RailTel is seeing a gain of 6% as we have it, and so is CDSL. Kush, you want to come in on CDSL for me or any of those counters? I think Monday belonged to Angel One, Tuesday belonged to Nuvama, Wednesday belonged to BSC. Come Thursday, all of them were muted. Today it's CDSL.
I think that's exactly the discussion we had. There is a lot of room on the upside in the entire space, in the entire financial.
I don't think a fundamental analyst would agree with you on that, but sure.
A lot of them maybe perhaps would not have made as much money given the valuations. But then again, that's the kind of market we are in, right? So let me also add one stock to the list, which is BSE. It's had its share of correction. It's had its share of the downturn. Now the recovery and the revival is underway. I think that's one stock adding to the Angel Ones and the CDSLs of the world. This is one stock that you want to keep on the radar. Has gone into some sort of consolidation over the last 2-3 sessions, but that's okay. We'll take that given the kind of up move that we've seen. Positionally, you could look at 2,900 plus kind of levels, and on the downside, you're looking at a 2,650 kind of a support zone. So BSE also, add to that universe. I think there's a lot of room on the upside in a lot of these names.
Aditya, you are the fundamental analyst. You want to tell us whether you agree with the technical view on some of these capital market players? Angel One, Nuvama, BSC, CDSL, and the list is that's pretty much it, yield-wise. What are you doing with these counters? Do they look good to you at these levels? Anybody that is indicating to a medium-term strategic tactical buy call?
So firstly on CDSL, what is happening is they've announced a 1:1 bonus, and today is the last day.
That's probably what it is.
That is why CDSL is moving up, because people are loading up the stock. Over the last about 1 month, CDSL has already moved up 35% on the back of a very strong result that they posted in Q1 of FY25. Overall, on all of this space, I'm really very positive. BSC could get re-rated as NSE comes into list, maybe sometime next year. CDSL also continues to drive good market share as compared to NSDL. So all of these companies will continue to do extremely well. Even the wealth management companies, they will also continue to do extremely well. The only risk here is if the regulator comes and tries to put some regulations on the FNO trading, brokers could get really hit, and SEBI has put out a consultation paper as well, where it is trying to regulate over exposure of retail investors into all of this space. So this space is really very good, but investors need to add all of these stocks only on correction and not go overboard, because there could be a swift correction as well. But from a longer term perspective, about 5 to 7 years, all of these stocks look really very good.
Aditya, in fact, that was exactly the point about what the regulatory risk is. And I just want to pull up Angel One, for example. It's not just regulatory risk. It's also a lot of tech sort of challenges. Angel One had to put out a clarification yesterday because there was some fraudulent brokerage using their name. So there's regulatory risk on one side, but there is actual challenge as the space gets more and more crowded. I'm just wondering, within the space, what are the players that you are constructive on?
Within the brokerage space, I am not constructive on any of the brokers, because as you said, the brokerage space is getting very, very aggressive. Reliance Jio is also expected to come in here. So I'm not very aggressive. On top of this, the regulatory risk is there with respect to FNO trading that the regulator is pondering upon with the consultation paper that they have taken up. So in my opinion, the better way to play this would be some exchanges like BSC, some demat account companies such as CDSL, That's the real better way to play it. Brokers are a complete avoid at this stage.
All right. Thank you so much, Aditya, Sudeep and Kush for joining in today. And so we were off to sort of not very exciting start on the market, but not negative at all for sure. Definitely some movers and shakers. But before we get into a break and get on with our corporate conversation, interesting note coming out from Nuvama on paint companies. Now, the firm has an anti-consensus buy on Asian Paints, Berger, Indigo as well. Mahima joins us with the highlights. Yes, Mahima.
Tamanna, so just to set context for the viewers, a lot of brokerages recently have remained cautious with the paint companies. However, Nuvama has said that they maintain an anti-consensus buy for all the three paint companies, that is Asian Paints, Berger Paints and Indigo Paints. Now what they're saying is that there are gradual signs of rural recovery and margins are set to go higher from here because raw material cost price have remained benign so far, and worst of negative pricing is behind and pricing growth is likely to come back soon. What they're also saying is that Birla Opus, which is which is a recently new entrant, the consumer response to this has not been very good so far. It's been weak, and what they're saying is that despite the new entrants, there is significant resources, so they do not expect that Birla Opus will disrupt the markets of the legacy paint companies. What they're saying is that valuations are reasonable for the legacy paint companies right now, and operating leverage too shall return from Q3, and further price hikes could also happen in the coming quarters, which is also being guided by a lot of these paint companies. Now, all these paint companies have also given commentary on Birla Opus. Asian Paints says that new launch seems to have underperformed as per expectations. Berger Paints said that it's confident of its ability to compete effectively against the new market entrant, and Indigo Paints has said that no changes in competition or pricing pressure from the new entrant is seen so far. Now, Birla Opus in its AGM, Grasim's AGM, has said that the company remains confident in achieving the 10,000 crore revenue mark in 3 years. They've done so far 7,000 crore of investment, and the capacity is of roughly 1,200 SKUs, and 6 facilities will be operational for them by the end of FY25, and they right now have a distribution network of roughly 102 depots. Lastly, in terms of commentary, in terms of FY25 outlook from the paint companies, they are expecting a double-digit volume growth, which has outpaced the staple companies so far, and rural markets are picking up, and they expect demand recovery, and B2B business is expected to pick up from Q2 FY25, and margin guidance for Asian Paints is within 18 to 20% range. For Berger, it is 15 to 17%, and for Pidilite it is between 22 to 24%. So this is the overall view from the Nuvama note on paint companies.
All right, thank you for that, Mahima. So paints on Nuvama's radar, not on investors' radar today. It's a quiet day for paint companies. We'll take a very short break, but on the other side, we speak with Poly Medicure. They're raising money. Himanshu Baid, the managing director, joins us, and we ask him what they plan to do with 1,000 crores they want to raise. Stay tuned. Welcome back. You're watching India Market Open. We're speaking now with Himanshu Baid. He's the MD of Poly Medicure. The company has raised 1,000 crore rupees through a QIP and approved an allotment of 53.19 lakh equity shares. It was at a price of 1,880, so a discount to Thursday's closing price at least. Mr. Baid, a very good morning to you and great to speak with you here on NDTV Profit. Let's start with the basics. What is the purpose of this fundraise, the 1,000 crores you've raised? Can you lay out for us the plans going forward?
See, basically, we are setting up 3 new plants, and basically this is for expansion of our dialysis renal business, cardiology business, and critical care business. And most of the products we are going to make are going to be import substitution products. So that's where the investment is coming in. And then part of the money would be, kept for some acquisition opportunities, which we will look in next maybe 6 to 8 months. And also, for general corporate purposes.
We were speaking this morning, and of course, you're in the business of manufacture and export of medical devices. Mr. Baid, we were speaking this morning on the show about mpox and, the first case in Thailand. I mean, we don't know where it's going to go, but there have already been statements globally, at least from vaccine makers, saying they're ready if they need to be, etc. Just trying to understand your perspective on this. Clearly, the demand for things like disposable syringes is going to go up.
See, we are not in disposable syringes. We mostly do pre-filled syringes and some other products. But I think this is a pandemic we have to watch out for. And I think what I heard recently from, some vaccine companies, but they were still in the development phase of the vaccine. So I think we have to be careful. I think Indian government has to watch out at the borders, and maybe screen people at the borders, maybe if there is a screening mechanism to do that. But I can't talk much about it because it's not our area of interest right now.
All right, that's all right. Just wanted to get your perspective because you're in this space, and that is on top of mind. Let's come back to what you do. Let's talk about what the pricing mechanism is in your sector. Now, you already told us you've raised 1,000 crores. You want to start 3 new plants. You're focusing on 3 specifics. Segments. What is the kind of pricing mechanism you're expecting? How frequently do you take or can you take price hikes?
See, basically, we are looking at import substitution right now. And when we look at import substitution, definitely will be cheaper if we make these products in India. And also, when you look at pricing, we probably are around 30-40% cheaper than what is being imported into the country today. So for us, that gives us enough room to go for, further price hikes as we see raw material prices changing. But I think even at that 30-40% discount, we'll be able to hit our margins, what we have been projecting for in the beginning of the year.
Mr. Baid, good morning. It's also Samina joining in. Congratulations. Your QIP has been subscribed by some very marquee names, Lighthouse, SPI, Nomura. I mean, you've got the creme de la creme who's betting big on Poly Medicure. So congratulations, and I'm guessing lots of strategic advice as well will come from them. But you had indicated that you want to make these investments for expansion. Now, the expansion plan, till they become revenue accretive across dialysis, cardiac care, and critical care, what is the time horizon and what could be the key growth drivers between now and, say, the next 2 to 3 years until the time that these facilities come to stream?
See, basically, if you remember, we had also did a fundraise in 2021. And out of that, we had, invested in, 4 new plants. And almost 600 to 700 crores were invested there. So all the plants have gone live. And as we speak, they're getting populated with more equipment, more machines. And that will help us to, initially, that momentum we are carrying with 20 to 22% growth, that will carry through these 2, 3, 4 plants, which new plants have come up in last, let's say a few years. And once these 3 additional plants will be ready by end of 2026 or early 27, I think we'll be able to then, catch up with that momentum again and continue with that pace. So that's the whole idea that, this industry has a long gestation period because this needs a lot of technology and also a lot of regulatory approvals. So we are trying to, match up with the pace, ensuring that we have enough capacity available to grow And because Polymed is exporting 70% of its products, so we are also focusing on global markets, but we can sell the products which we are going to make in India for the global markets.
You've received approval, I believe, for 4 products from the US FDA. Another 8 to 10 products are awaiting approval. The 4 that you've received approval on, how much will they contribute to your top line? And the 8 to 10 that you're waiting on, when can we expect some news on that front too? And when will it be revenue accretive largely?
So basically the sales to US has started already, and we've just started in this current quarter. And of course, we had some other products which we were already selling earlier, but the new products which we have received FDA approvals, we've started revenue for that. And
Himanshu, how much do they currently contribute, and where do you see it at the end of the year and the next 2 to 3 years?
See, we have not given that close guidance, but we have given a guidance for 3 to 4 years, and we are expecting a revenue around $15 to $20 million from the US market in next 3 to 4 years, and I think that's already started picking up. Now, this year, I can't give you a very definite number, but should be in exceeding maybe $2.5 to $3 million.
At a more macro level, where do you see volume growth? Because I know domestic, while may not be the big focus for you, it's a market you cannot ignore. And we've seen that with a lot of pharma players as well recently, but the domestic business is showing signs of revival and, of course, opportunity. Where do you, or what would you like to see your domestic business grow at? Because that is in single digits from what I've seen in the first quarter of FY25. And where do you see volumes, what is the percentage growth we can expect from the company over the next 2 to 3 quarters?
So I think for the current year, we expect the domestic business to grow between 20 to 22%. And the first quarter, the business was slightly lower because of certain government businesses we had in the previous year of the first quarter, which are not there anymore. And because of that, we saw a little dip. But on the trade side, which is the majority of our business, it has grown very well, grown around 25% even in the first quarter. And hopefully, we'll continue. And I think we see that great momentum going on. Already, healthcare in India is expanding. And we are getting into all large hospitals today. So we should be able to reach around 20-22% for the whole year.
So, Mr. Bed, am I understanding correctly that on the domestic side, you want to move away from government business?
Yes.
And move completely to trade?
Yes, that's correct.
What is the thought behind that? Because the government is a big buyer as well. There's a lot of schemes and programs. Just want to understand the thought process.
We will be there in government contracts, but basically we want to focus more on the trade because today 75% healthcare is now in the private hands, private sector, and government is now becoming more like a payer than let's say providing healthcare. Because you have Ayushman Bharat, so government's focus is moving more towards the payer side. So I think and that is given, the care is given by the private sector today. So I think future government will be focusing more on the paying side than being a care provider. So for us, the momentum will shift to the private side. And I think today private sector is going much faster than the government sector. And that's the reason that we are focusing there.
What capacity are you at currently, sir? Because if you're adding so much more and so much more is coming on stream from 2021, I'm just trying to understand the demand-supply mismatch, if there is any. That will give us a sense of your pricing power too.
See, currently we are operating around 75% plus capacity of all our plants. Technically, we can go up to 80% max. That is what we know because we also have, changeover times in manufacturing processes. So that's where we are. But today, I think we almost run at full capacity, what we are doing right now. And as Polymed is exporting to 120 countries, I think demand outside India is also growing very, very fast because we are seeing that China plus one, which is playing out very strongly now. And no new investments are going to China in last few years. So I think Polymed and India is very well poised to attract new investments, new customers in the medtech sector. China is 150 billion today. We are just 15 billion. So there's a big opportunity sitting in front of us as an industry to go to global markets.
And that import, the China import is what impacted you last quarter. But luckily that list...
No. Because see, the good news is that industry is fully regulated today. And I think that happened only on 1st October 2023. So I think after that, I think government has gone very strict with regulatory, bringing the regulations, bringing the standards in medical devices, which never existed before. And also, with strong support, internal support from the CDSCO, where they are trying to now, control, products through testing, even at the customer end. I think that is going to change, being a big change in the quality of medical devices just sold.
Right. Himanshu, very lastly, before we have to let you go, a quick word on any upside on margins. I know you've guided for quite healthy and expansion of 100-150 basis points. Any upside on margins for FY25? And will they progressively improve going into the next 2 to 3 years? Because like you said, the regulation in India should also definitely aid, players like yourself. And any big bank FDI approvals that we could be looking forward to from you?
See, basically, we have already guided very well for the margin. I think company is doing very healthy. Last year, we had 26%. Now we are talking about between 27.5% EBITDA margin this year. And I think as we go more in critical care, I think we will see some improvements. But I can't tell you much about it right now. But I think as time progresses, our target is in next 2-3 years, we want to reach by around 30% EBITDA margins. That's what we want to reach.
Right, good luck. Congratulations again. I'm guessing you're going to this weekend laughing with all your new stakeholders at Poly Medicure.
Thank you.
Thank you. We'll take a break. We'll come back. On the other side, we'll talk to Aditya Khemka from InCred Asset Management. He tracks the pharma and healthcare sector quite closely. Get his view as well on Poly Medicure. Welcome back. You're watching India Market Open. It's a quiet Friday, and if you're seeking entertainment, the street may not be providing that for you. Today, the Nifty 50 and the Sensex both trading flat as a pancake. Pharma has been the big mover this week. You had stocks like DVs hitting record highs. And of course, we caught up with another company just a few seconds ago. But Aditya Khemka, fund manager of InCred Asset Management, joins in with his view on the healthcare pack. Aditya, before I go into earnings, just before you joined us, we were talking to Himanshu Baid of Poly Medicure. They've had a very successful QIP with some very solid hands like a Lighthouse, a Nomura, and SPI coming in. Expansion plans are looking ambitious over the next 3 to 4 years. Do you track Poly Medicure? Do you feel like this could be a stock that may potentially turn out to be a multi-bagger and should be on a strategic pharma allocation in one's portfolio?
Yeah, good morning and thanks for having me. So yes, we feel that medical devices as an industry in India has a lot of scope to grow. Obviously, the PLI scheme and the import substitution, China Plus One, these are the factors that will help the business to grow. Poly Medicure as a stock, we do not own it, hence we cannot comment much on it. But we feel that the opportunity is large and all the players in the space should benefit from the opportunity.
You should benefit from this opportunity. You do think it's a good space that one could consider investing in. Well, let's start with earnings now. And I just want to wrap up the Q1 earnings because most believe that it's been a good quarter. If you split it up between the international business, India business, the drop in raw material prices, healthcare has stood out. Tell me, what is your macro sort of takeaway from the first quarter, and what are you expecting into FY25? I want a word on the US generic space as well, because of the election overhang, or rather the outstanding election, impending election in the US. Pharma is one sector that could get impacted. So how would you strategically, position yourself?
So we feel that the unbranded space in 1Q FY25 did exceptionally well, and that's a space that we generally don't invest in because it tends to be very unpredictable and a low ROE business. But truth be told, first quarter FY25 numbers were beyond our expectations in the space. However, we are not sure of the sustainability of such earnings that the space is reporting. We believe the next 3 to 4 quarters may be good in the space, but then the space would normalize. And once it normalizes, stocks which are more exposed to that space may not be doing as well as they have done in the past couple of years. So I think that's where, unbranded generics is probably at the peak profitability at the current time. And the stocks which are exposed to that are also trading at peak multiples. So when you have peak profitability married with peak multiples, generally that's a recipe for some difficult outcomes. So as investors, we tend to stay away from such spaces where we feel earnings are not sustainable and multiples are too high. So, that's where unbranded generics stand out. For us, we don't invest in that space as of today. We don't see any value in it, and we doubt the sustainability of the earnings. On the branded generic side, in the 1Q25 numbers were extremely good. Top line growth was good, volume growth was good, and margin expansion did happen. So, that's something we remain positive on. However, there are stocks in this space which have become extremely expensive, and that sort of worries us because, we don't want to invest in a good business model at any price. We want a price risk reward ratio which is in our favor. So branded generics now have become fairly selective in terms of, how we pick stocks in this space. On the API CDMO space, again, earnings remain lumpy. So some companies reported a great quarter, whereas other companies sort of, reported a benign quarter. But that tends to be the nature of the beast. It's a business that tends to be volatile between quarters and even between years. So, we don't try to sort of look at this business on a quarter-to-quarter basis. We look at it more from a year-to-year basis. So we continue to believe that CDMO as a space will do extremely well over the next 5 to 10 years. This is a mega trend which investors have to be aware of and have to play in the next 10 years. Hospital earnings were brilliant in the last quarter. Again, ARPOB growth was great. There was volume growth. However, many hospital stocks, especially the larger ones, have become prohibitively expensive. Some of them are trading at 65 to 80 times operating cash flow in terms of enterprise to operating cash flow. And that's a multiple we are not happy with. We do have a couple of hospital stocks in our portfolio, but these stocks tend to trade at 17 to 25 times their operating cash flow rather than the 65 to 80 times for the larger companies that we do not own. So we are again value oriented in the hospital space today because the larger names have become just too expensive to invest in today. Last but not the least, diagnostics. I think that's where the biggest positive surprise happened in the space. So diagnostics reported very healthy volume growth. Price recovery has happened. So, in the past, because of online platforms launching diagnostics, there was some disruption in pricing. That seems to be over now. And, most diagnostic chains are taking price increases. So there has been a positive earnings surprise for us. And we still find many stocks in the diagnostic space which are, fairly valued or below fairly valued. So that's a, great area of interest for us because the earnings are improving and valuations are in our favor. So that's the space we are most bullish on at this stage. At a broader level, what we are seeing in the market space is that investors are rotating money from growth-oriented sectors to value sectors, and that which is where I think healthcare is finding favor today.
Yeah, Aditya, very detailed response there on how, Incred looks at every segment of the healthcare space. Tamanna here. Let's just get into a bit of detail and minutiae of how that translates into specific stocks and sectors. Now, Pharma, seen as a defensive play, has seen a fair bit of interest recently. So if I were to ask you, let me come to CDMO first, because you were most constructive on CDMO and you said that's a mega trend that you have to follow. What are the companies at the forefront of that mega trend in your view?
So in our portfolio, we have Jubilant Pharma, we own Hycal, we own Syngene in the space. And again, the reason why we choose these companies is because we want to be focused on companies that do CDMO for innovators and not necessarily just CDMO for generics. Because we feel CDMO for generics is a more fragile business, and that business tends to be lower margin, lower ROE compared to CDMO for innovators, which tends to be higher margin, higher ROE businesses. So CDMO for generics is something we like to stay away from, and CDMO for innovators is where we put our money on to work.
Okay, let's come to the hospital sector, and you're absolutely right. Q1 has been good for the hospital space in a quarter which is traditionally not their best necessarily, but you're talking about valuations. Which do you think have now run up beyond valuations, and where do you still see some steam left to go in the hospital space?
So look, it's difficult for me to talk about what we do not own. So I will be talking about what we own. So what we own, valuations are reasonable. So we own Healthcare Global, which is a super specialty oncology focused healthcare chain. And we own Aster DM, which is again a South India focused multi-specialty, where again valuations seem to be very, very favorable for the investors.
Okay, so let's assume what you do not own is also part of the bucket of stocks that you think are richly valued. Just, as we have a couple of minutes left, Aditya, I want to understand what are the policy-driven sort of headwinds that the pharma sector may face, because we are seeing a kind of a rejuvenation. But just recently, for example, the government has loosened up some of their imports on certain segments for various reasons, diabetes drugs, cancer drugs, etc. There are some companies who have pretty decent monopolies in this space. Do you see such policy headwinds going further, and which do you think are the companies that could get most impacted?
So look, in the pharma space, there are generally 3-4 types of regulations. Let's take them one by one. So firstly is obviously the domestic market price regulation that the government comes up with, and there are fixed dose combination bans that keep coming here and there. So that's always something that exposes branded generic companies to that kind of regulation. But within the branded generic universe, I think MNC pharma companies, the Glaxos, the Abbotts, the Pfizers, the Sanofis, they are more exposed to these regulations because they tend to have products which are on the higher end of the pricing spectrum. And therefore, when the product comes under price regulation, these are the companies which bear the brunt of, majority of the brunt of the price regulation. Coming next to another regulation that generally tends to happen is the US FDA issues, right, that you hear about. Now that generally impacts the unbranded generic pharma companies more than any other bucket. And the unbranded generic pharma companies again is a space where, we find regulatory challenges, we find margins are lower, we find ROEs are lower. So, that's a space that we completely avoid investing in. Although it's a large part of the index, it is about 50% of the index, like a Nifty Pharma index or a BSE healthcare index. But that's a space that we really want to avoid because this risk reward isn't in favor of investors today. Another challenge that keeps happening is in terms of regulatory landscape is the ability to import or export, because government sometimes tends to put restrictions on import or exports because they want certain drugs to remain in the country, or they want the country to be self-reliant in matter of certain drugs. But that's always healthy for the industry. In the short term, it may lead to some cost pressures or growth challenges, but over the longer term, if the industry becomes self-reliant, is always better. We have seen historically, countries like China being hostile when times are tough. So we saw the COVID time. China was the first country to come up with a COVID vaccine, but they were the last country to sell the COVID vaccine to anybody else. So they weaponized the disease, they weaponized their ability to create a vaccine. India, on the other hand, was I think third or fourth to come up with a vaccine, but we were the first to give the vaccine for free to our neighboring countries. So this geopolitical dividend we earned during COVID was big.
Okay, I'm out of time. Sorry, Aditya. I'm just going to wrap up. I want to get your top picks. Let's give the viewers, a clear takeaway before we wrap the show. What would be your top 3 companies in the pharma space today? And would Divi's be on that list? I'm asking because of the kind of run-up Divi's has had.
Sure. So the top 3 positions that we have in our fund are Thyrocare, Jubilant Pharma, and Krishna Diagnostics.
Sorry, which was the first one?
Thyrocare Technologies.
Okay. Thyrocare, Jubilant, and Krishna Diagnostics. All right. We'll have to let you go, Aditya, but absolute pleasure speaking with you. Thank you so much for joining us. Aditya Khemka there talking about all things pharma. We'll take a very short break, but stay tuned. We have Talking Point up next and a very special guest. We're speaking with Sunil Kaul from Goldman Sachs. We're going to be talking to him about all things Fed and, of course, the outlook on emerging markets like India. Stay tuned.